when was money first documented, or when did we first move from barter to some sort of currency?
Yeah, accounting and ledgers were the first iterations of money, and this is going back 5,000 years in like Greece or something.
Mm.
And that was carved tablets that were just used for accounting.
Wow.
And that was the first idea of, banking and lending,
Right.
borrowing.
I'm glad we don't do that anymore. It'd be a bit brutal. Just have a whole slab. Here you go.
Well, if we did do it, it would be more transparent and more fair, because our current system is not fair, and our current system is set up to make it so confusing that you can't possibly know what's happened behind the scenes and how we got to where we've got to. But I will ask you a question. Where do you think money comes from?
The way I understand it is that there's central banking, and the government essentially works with the central bank that decides like when is more money released into the system, which is where the inflation side of things come from. Yeah, so money's printed, and money's, as you've said previously, it's a social idea where it's like, this piece of paper is worth X amount of money because we're told that it's X amount of money. But then it's just printed and created essentially out of thin air, which is why most countries go into trillions of dollars of debt.
Yeah, most countries do. And over the time, 140 currencies have failed and gone to zero.
Wow.
Zimbabwe are into their fourth iteration of a currency.
Can you talk to me about that then? Because this was something I was interested in about the video you recently shared on the history of money, which, are you going to share it with people? Is it going to go on YouTube, the 20-minute one?
It will at some point, but that'll be the start of the course that I'm creating around money. I'm not sure exactly how I'm going to put it out there.
But it'll happen. Yeah, as we're working on that. Well, you spoke about Argentina resetting their peso. Is it a peso?
They're on the peso. They were, yep.
So with a reset of money, how does a government reset money? Like how does that work? Where they go, nope, we're starting with a new currency, blank sheet. Like how does that work?
The currency hyperinflates, like the Weimar Republic.
Yep.
The German mark, it hyperinflates. It creates a debt spiral. It's so worthless that they just stop using it. And if you hold the dollars, well, guess what? Like sucked in, you're left with nothing. There's no purchasing power to it, right? It's the purchasing power that you want the money. You want the money because it's going to buy you stuff.
Yeah.
And if it's going to buy you less stuff next year, you are incentivized to spend it today.
So is that currently happening within Australia? Then
it happens all over the world. It's what money is supposed to do. Not from what you and I think, but from the people who create the money, and from economic systems, more to the point. It's not a malicious government trying to do this to us, right? Don't take for malice that which can be adequately explained through ignorance.
Right.
Which means they're not being mean, they're just stupid.
Are they stupid, or are they just relying on a flawed system?
I don't think they understand the system. People like governments. So, in your one explanation about Argentina, for example, they stopped using it. In hyperinflated, there's no point in it anymore. It's got no purchasing power. You need 1 million peso to buy a sandwich. Now you need 2 million. Now you need 1 billion. Now you need 1 trillion. Okay, it doesn't work.
Yeah,
they just stopped using it. They abandoned it, and they would either create a new one. And again, it's based on psychology. So if people trust it, they will hold it. If people don't trust it, as soon as they get it, they get rid of it.
Yeah.
So that's called the velocity of money. I'm going to try to remain on topic because I've already got like 3 answers that I've been trying to get back to.
No, we're good.
The velocity of money is how quickly the money stays in your – people will keep it in their pocket.
Right.
And so when the velocity of money is 1, you get it and you get rid of it, that's bad. There's no trust in the money.
Well,
They
is
want to
that
put it into something else to
is,
store it.
is that kind of where a lot of people are at now, living in the paycheck to paycheck society,
That's a different
or is it
thing.
different?
The paycheck to paycheck is that life is so expensive that they have to spend the money,
Right.
as opposed to the velocity of money being that you're in the Zimbabwe, Bolivia, or whatever it is,
Yeah.
and or the Argentinian peso or the Weimar Republic mark. You get the money, you spend it that second. You get it, you get rid of it. The velocity is one; it comes in, goes out.
Right.
Um,
Because the value of that
they know that
is
the
going
value
down.
it's inflating. They know that the purchasing power is going to buy them less in the future,
Yeah.
and before, without getting too abstract, um, that is why interest rates kind of are important.
Mm.
An interest rate is telling you, if an interest rate is 5% and I want to lend you $100, well, you have to pay me 5% on that $100, which is $5.
Mm.
So next year, you have to pay me $105 because money worth spent today is better than money spent in a year. If I lend you 100 and then later you give me 100 back, but it only buys me $95 worth of stuff,
Wasn't worth it.
I got screwed.
It's not fair trade.
It doesn't make sense. So
Yeah.
why would I do that? So inflation is important in that sense. If inflation is 4%
Mm.
and I'm going to give yep, you can do it at 5%, and I get it wrong and inflation ends up being 10%, I just lost $5 worth of purchasing power.
Right.
I lost because my prediction was wrong.
Mm.
So it's based on, even interest rates are based on psychology. The RBA, right, or the Federal Reserve, they are supposed to be independent from the government.
Yep.
And however,
The Reserve Bank is meant to be independent from the government. So like the people in charge of the Australian dollar, they're meant to be independent from the
they're
government.
supposed to be sitting around as a group and they determine how's the economy looking, what's happening with employment, what's happening with inflation, what's happening with all these mechanisms. We're trying to identify it and then give it one number.
Mm.
Impossible.
Yeah.
It's so complex. There's so many facets to it. You can't just dumb it down to one number.
Mm.
And yet they think that they can. And so then they'll say, well, all right, we're going to leave interest rates unchanged. We're going to drop the interest rate 25 basis points, which is 0.25%. And let's just use a different terminology just to confuse people that little bit more. What's Trump doing at the moment with Jerome Powell? Have you come across him? He's standing over him.
Trump or
over Jerome Powell.
Yeah, no. I don't
He
know
went
Jerome
to
Powell's.
meet the Federal Reserve new building that they've paid for in America.
Yeah.
Um,
While being $35 trillion in debt.
yeah, and he's exactly. They're funding it, the purchase of this new building and the building of the building. He's standing over him and he's saying these comments like, well, you need to lower the interest rates, egghead. Like he's tried to fire him. He's tried to take it to court to see if he had the right to fire the head of an independent organization that determines the cost of money, because to have a growing economy, interest rates must go down. That encourages growth.
Right.
Because it's cheaper to borrow money. It's the cost of money.
When was the last time that was happening, though? Like, when was the last time interest rates were going down? Was that like during the 2008 financial crisis?
Interest rates have gone down for 50 years,
Right.
as a whole.
Okay. I didn't know that. That's interesting.
Yeah. I'll put a graphic up in Australia and globally, and they have what's called ZIRP, zero interest rate policy.
Right.
Zero interest rates. The cost of money is zero. Like I said about Apple in one of the other episodes, give me if you're going to charge me 2% or 0.1% like they charge Apple interest, give me all the money that you can, because I know the monetary supply is growing. I'll take that money, I'll put it into anything that's going to be a better store of value than the money, and I can make those interest repayments, and I come out quantums ahead of anybody else.
If interest rates have been going down, did you say interest rates have been going down for 50 years?
It zigzags, right? Like there's cycles within that.
Yeah, it's not linear.
It's not linear, but the trend, you zoom out, you see the trend.
So if it's been trending down for 50 years, why then is like inflation and the dollar less than it's ever been worth? Does that make sense? Like if interest rates have been going down for this long, That signals a growing economy, right?
It's forcing a growing economy.
Okay.
It's not signaling it.
Mm.
The crazy idea, and let me where where was I? So what were you saying?
I was asking about, this is fun, by the way, like to talk about this during a podcast, because this is a real conversation. You do lose your train of thought.
Hmm.
I was asking, with it having been 50 years of inflation no inflation,
Interest rates going down.
interest rates going down, which signals a growing
Yeah,
economy,
okay.
but then inflation seems to be going this way. So why is interest rates going down, which signals growth,
Hmm.
but then inflation going up and the value of a dollar being lost?
There's something there before I can answer that question. Inflation isn't. Inflation is like it's a rate of change, which means from this period to this period, from 2020 to 2002, inflation was 9%.
Yeah.
It's a backward looking metric because they have to collect the data to then say what inflation was. So they're trying to predetermine where we are now. We're actually 6 months ahead of the data.
Right.
So then they're trying to predict what's going to happen in that next 6 months. What's happened in that 6 months time. So in 2020, they printed a bunch of cash, gave it to people. That created inflation, but it also was a supply demand problem, right? Because of the supply chains around the world contracted. COVID stopped people. Every country had different rules. Supply demand inflation is different, and that's why they said it was transitory. It was temporary.
Right.
But it wasn't temporary because the creation of money from the government, that is the true inflation. That's the inflation of the money supply, right? Keynesian economics, which was what happened in 1933 to stop the Great Depression. So we had the boom of the 1920s.
Post World War Two.
Post World War One.
Post World War One, sorry. Yeah.
That would happen because of the creation of money. All right, governments pretending. The English bank, the Bank of England, they offered a war bond. I've mentioned this,
Yeah.
and then they said it was oversubscribed. Lots of people wanted to invest in the war. They didn't,
Yeah.
so they faked it. They created the money that had a hard backing to a hard currency to gold, and then they came out of the war, and then they revalued it, and that created a problem. They revalued it up in 1925, and then they revalued it down in like 1932. And that was like, oh, hang on a minute. The value of the dollar is worth less. The value of the English pound is worth less than what we thought. And so
this is a complex topic.
It's so complex.
Like,
there's so many facets to it, and it's independent in different jurisdictions. Like I talked about Weimar Republic, Germany in the 20s, they had hyperinflation.
Yeah.
They lost the war. They were doing it half on purpose because they had to make war repayments. And so they purposely did that to devalue their own currency. China and make less repayments. China today and for the last 10, 15 years have been doing the same thing, purposely devaluing their currency, right? So that they can export to the world. Then the money, it's export versus import. If you have more things flowing out of your economy, like Australia, we sell the rocks, we get more money back. Great. China, they make a bunch of trinkets and they sell it and they get the money back. Then they do something with that money. They can't store it in their dollars because they're purposely inflating it away.
Yeah, they're devaluing their currency.
They're devaluing it to the American dollar. And so then they buy the American bonds, the American bills, and then they store their money that way. Or they have the Belt and Road Initiative where they buy the Port of Darwin. They buy real estate in Australia.
Yeah.
They buy the Panama Canal. They buy infrastructure around the world which stores value and it has a utility to it. They're not, no smart person or country stores their money in money. You lose. They store their money in hard assets, hard things. But we live, this whole setup was so that I could explain that Keynesian economics was a 2 to 3% increase in inflation. That's what he decided, that in the future we're all dead. Who cares? That was literally the economist's view that is based around MMT.
We'll buy from 100 years now and spend it now. Is that essentially?
Yeah, we'll just kick the can.
Yeah.
We need 2 to 3% inflation to encourage growth. We need to have things going up because then it will make people. It's so pernicious and so slow that they won't notice it,
Yeah.
and that is what.
It's like a death by 1,000 cuts. You just don't see it happening.
Yeah, that's right. And then you bleed out, or yeah, you've got no blood left.
Yeah.
After that 1,000th cut, and we're in a situation as just a general worker, right? I'm in the same situation as you and to people listening. I'm not above it. I'm not in a safe place.
We're all affected by it.
We're all affected by it, just different different velocity, different compounding of it. So that idea, to me, I've looked at Keynesian economics. Okay, what is that? Let's look at Austrian economics, which is the opposite of that, and that is that it came about in Austria, in Germany. Why there? Well, because those places went through the bust. They went through the borrowing and hyperinflation, and they went, holy crap, that doesn't work. Maybe we need to try a more stringent, slower, safer, not borrowing to infinity mechanism. That's Austrian economics. Our system isn't based on that. It's based differently.
Why don't you think humans have learned from history then? Because didn't you say at the start of this something like 90% of incomes have all failed? Or
140 currencies have failed.
Yeah, like if there's been 140 failures, surely we would have learned.
That's over there, mate. That's over there. They don't know what they're doing. We're fine here.
Yeah.
It's ignorance and arrogance. It's arrogance. It's like safety in our environment. Look at Australia. That'll never happen to Australia. That'll never happen to America. And you're probably right. But is it worse that it happens and it collapses? Or is it worse that it is so pernicious and slow and gradually taking from your purchasing power? Isn't that worse? Like, I see that is worse because we don't even know. Like, you're pretty well read and you're so fascinated by, oh, hang on a minute, how does that work?
Yeah.
And yeah, no one knows how we got there.
Or maybe it's one of those things where, as maybe money is just one of those energetic things where it's destined to collapse at some point. If it's happened to 140 currencies, I'm sure we're on the way there in some type of way.
Yeah, when we get there, what will happen?
And
I don't agree. Like, I don't agree that should be the case. Your money should be able to store and hold value.
Yeah,
I've sacrificed my time and energy. I want to receive something back that can be used as a medium of exchange, a unit of account, and a store of value. Yeah. We've just discussed for 20 minutes why it's not a store of value. Moderately. There's far more that goes beyond it in inflation. So back on your initial comment to my question, do banks create money? Central banks is right. They form a large component of it.
And the government
it's actually not true.
Them, yeah. Like the government will put an order into the central bank to say, like, we need more dollars, and then they'll create the 100 million or whatever it is.
This is the complexity of how the whole system works. And before I get there, though, banks create money.
Okay.
Banks create the majority of money, not central banks.
Is that the
just
big
average banks?
The big four in Australia?
Yeah.
They're like probably the main contributors of it. Now, is that from people storing their money in the bank? Is that what?
It's from fractional reserve banking.
Right. I've heard of this before.
Yeah.
Okay. Are you happy? Is it too much if I ask you to explain fractional?
Yeah.
Banking?
So fractional reserve banking is the idea that you earn your wage, you get $1,000, you put it in the bank, and then the bank, well, they can lend that out, can't they? Well, it actually started a century ago, right? And it started when people would store their gold in the bank, and they actually had to pay the privilege. They had to pay the interest rate to store the gold in the bank to keep it secure. And the reason they wanted to do that was because they didn't want it in their house. They didn't want to be robbed.
Yeah, this is the gold standard times, right? When money was backed by gold, where you could go in and be like, I have $100. I want $100 worth of gold from the bank.
Yeah, it was redeemable.
Yeah,
it was redeemable for gold. And even in those times, that's when fractional banking started, because the bankers realized no one's redeeming the gold because they create a note to the gold. They'd say, You have an IOU on paper. It says Ryan's Gold, and he has 100 units of gold, 100 ounces of gold. He can redeem that when he wants, but he's now formed a system where it's easier and less burdensome that he can just hand that certificate to someone else and purchase goods. So people were operating amongst themselves, transferring the notes of redemptions for gold. And the banks went, we can make a little bit more money here. This is human behavior. This is incentives. I'm competing with the bank down the road. How am I going to make more profits? Well, I'm going to start lending out twice as much gold. Even though we've got a certain amount of gold, I just create fake notes to it. I charge them an interest to borrow it. This is innovation. This is capitalism. There's nothing wrong with borrowing, right? We've done our episode on debt. There's nothing wrong with debt. Debt creates the ability to use ideas, innovation. America, all these ideas that we operate in, the builders of these chairs, this computer, we wouldn't have it without capitalism, lending, and debt. Because you don't have any resources and money to create an idea. You can do that. So then the banks who were holding the gold, they started fractioning it away, and eventually that grew and grew. And then the other bank went, well, hang on a minute. They're borrowing it 2 times. We're going to borrow it 3 times. So we're going to lend out 3 times as much gold as what we have. This is what the problem of modern banking was created to stop. A bank run. You heard of a bank run?
No.
When the confidence in the money, war comes. Shit, I need to get my money out the bank. I need to get my gold out the bank. Something's happening. Something's going on. Everyone wants to do it. It's not there.
The bank doesn't have it.
No, because they've fractionally reserved it. They were greedy.
They've lent out $10 million while only having $1 million in their bank because they're expecting only one of those 10 to ask for $1 million at a time.
Yes.
Or whatever it may be.
Yes.
Right.
And so modern day, right, let's say you buy a house, you've got a deposit of $100,000. Well done. You did a fantastic job saving.
Yeah.
Even though that house value was running away from you as you were trying to save, you can now purchase that house. You're going to put your $100,000 into the bank. You're going to borrow $1 million to pay for that house. Where does that money come from?
Does it come from others or does it come from the fractionalizing?
This is the fractionalizing of it. This is the encouraging. When interest rates are low, it encourages lending. It's cheaper to lend. The bank literally creates the money out of nothing, puts it, you buying a house from me, you've saved your deposit, but you've only got $100,000. That $1 million gets deposited into my account. I only bought the house for $500,000. So I've just made money. $1 million has been created out of nothing. You've got to keep, it's a liability for you. It's an asset for the bank because they get the interest repayments year on year on year, and you'll end up paying them $2.5 million back for that $1 million ability to take that now.
Yeah.
I've got $1 million. What do?
What do?
I go buy another house. I buy a $2 million house. And so then I give my $1 million to the bank, maybe less. Maybe I only give them $300,000, and I go on a holiday, or I put some into stocks, or I do something else with the money. The bank creates another $2 million to give to that guy for his house. It goes round and round and round. That what we've just explained is quite simple, right? And the checks and balances all occur, and the banks are just tapping away, changing those numbers digitally. The money's not there.
You can see the potential for collapse in that, though. Like, it doesn't seem like it's built off of
Why do you think they
stable foundation.
This is why the housing market can't collapse. This is why houses can't go down 20%, 30%. If it happens, the whole system collapses.
Yeah.
If I say I don't want the house and I walk away and I hand back the keys, they're going to auction this house.
Well, that was 2008, right? Like, that was the movie The Big Short, right? That was the housing market collapsing.
It was it was greedy bankers. It was ninja loans, right? No income, no job, and they'll give a loan.
Yeah.
No assets.
Which is wild.
Strippers buying 5 houses and then just, I pull the equity and then I buy another one. And America's housing market's very different. You can buy a house and it could be cash flow even, or even cash flow positive, right?
Yeah.
That's unthinkable in Australia. If you buy an investment property, it is negatively geared immediately. It's just the way it is, because the inflation of the housing supply is so, the inflation of the housing cost is so high, because people would rather store their money, right? They're looking for that. I can't hold it in the dollars. I put it into houses. It's better there than it is kept in the bank or in any other asset that I can think of.
Right, because houses are going up, like that. Houses are inflating, right?
Well,
But then the currency is depreciating in its buying
it's
power.
houses aren't doing anything, right?
They're just staying the
They're
same.
staying the same. The dollar's going down.
Right.
So houses denominated in dollars are getting more expensive
Yeah.
because the dollar's getting worthless
Mm.
and will continue to do so because of the constant expansion of the system. The interest rates, we've had them at 5, they're going to start coming down now,
Yeah.
right? And you have to make a call. Like, I knew a bit about interest rates. I locked in an interest rate of 2% in 2021 for 2 years on this house. Maybe it's 2022 for 2 years. And then it rolled off. So my interest repayments went from $20,000 to $50,000.
Wow.
And I'm like, shit,
Yeah.
like, I got to do something now.
Mm.
Then I had to sell my investment property.
And people aren't expecting that either, huh? Like, probably when
The banks, the RBA said, so they're supposed to give guidance, right? And this is the psychology behind it.
Yeah.
This is how ridiculous it is that people tune by every month to hear what they say. And then you watch the stock market. When the RBA governor speaks, the stock market either goes up or goes down based on what they've said.
Right.
And trying to you can bet on what color tie that they're going to wear, like Jerome Powell's going to wear at his Fed meeting. You can bet on the jacket,
That's wild.
and people read into it. He's wearing a purple jacket. We're coming into a period of growth.
Yeah. Right.
Right. So the RBA, where was I?
You were talking about house prices are going up, money's going down.
Oh, right. The RBA, jawboning. So they're giving guidance.
Yeah.
So in 2021, they said we will not touch interest rates when they were at 2%.
Mm.
We will not touch interest rates for 4 years till 2024. We're not even thinking about changing rates. That's what they said.
Yeah.
So what did the market do? Oh my God.
Buy.
Borrow. I'm going to borrow all the money
Yeah.
because I got 3 years to even worry about this.
Mm.
Within 1 year, it was the greatest increase in interest rates in history
Right.
because the interest rates went from 2 to 6.5%.
Wow.
Because, and so the poor little me, I'm okay, but many people weren't. Many people bought a $700,000 their first home, and because they went to the bank and said, "What can I borrow?" They said, "Based on your income and your expenses, you can borrow this, and you'll be okay."
Which is such
great. I'll do it.
That concept still to me is so insane that someone can go to a bank, say, "I'm earning this amount," and then them give them this astronomical debt for a house that they may not even be able to afford.
They're incentivized. It's incentives.
Yeah, 100%.
They want to create the debt. They want to create that's supposed to be this brilliant mechanism of the economy that's producing value. I tell you right now, houses going up forever does not produce any value to anyone. No. It is a utility. If you want to view it as an asset, you're talking about a house in Brighton for $4 million that you can rent out for $1,000 a week. That's $50,000 a year. The yield on that investment is 1%. That sucks. I'm not doing that. That means you're telling me, you're punting on the growth of that asset. You're just punting on it going up in value.
Yeah.
Because you've got, I don't want to go too down into houses because you won't shut me up. Let's move forward with money. And you try. What's missing from what I've said, or what would you like me to go into deeper?
I think what you've just described is the complexity of money, and I'm somewhat lost on just what's the alternative? Is there an alternative to this?
You have to play the game that's in front of you, right?
Yeah.
Don't you? You have to participate in the system. You can go and live in the bush and be a nomad. You go,
I'm chilling.
I don't like this game.
I'm out.
This sounds nuts, Ryan.
I'm going to spend $3 million and buy 172 hectares of land down in Western Australia.
Well, you go get a camper van and you travel around Australia and you just I don't know, you busk for your food.
Which is where
that's the alternative. Or you participate in the system.
Well, a lot of my generation is going towards that nomadic, if you would, lifestyle where they are spending 6 months living over in Bali or 6 months here. They base is out of Australia,
Mm.
but they're living in different countries, or they're traveling, or they're staying in RVs, or they're just renting for a good chunk of their life. And they're basically saying, to me, it sounds like they're saying that they don't want to play this game of inflation anymore. They don't want to play the housing market game.
I don't even think it's a choice that why people are doing that. I think it's, I guess it is a choice. But I feel like it's just so unfair that you come into the world, you're 19, 20, and you're like, well, I'll clearly never even be able to save the money to buy a house. So why the hell should I bother? I get it.
Mm,
I absolutely get it. And that's why I'm here,
yeah.
because there are solutions to it. We need
What do we do?
we
What
need
does a young person do in this situation?
what an individual does,
Yeah.
or how do we fix the system?
What does a young person do in this situation? Or just
Okay, so if you continue to participate in the idea of buying a house,
yeah.
you'll never win. Like
Mm,
you've mentioned it. I'm not buying a house until I can buy it debt free, because that's how scary debt is.
yeah.
And you do understand debt and the burden that it puts upon you, and then the how that captures your incentive and captures your choices.
When
So
it's debt in something that can be manipulated by a government or
yeah,
the
it's out
banking,
of your control.
like what
You're
you just
stuck.
said beforehand of your 2% loan going your 2% interest rate going to 6.5% interest, and that being a you
And
know
I had 2 home loans,
yeah,
right?
yeah, that is wild. That's a $50,000 loan going to what 100 sorry, a $50,000 interest repayment going to $150,000 interest repayment in 3 years, and the quote unquote average human being or the average income cannot sustain that.
Mm,
And then it's like, what, you just like work. This is the whole work your whole life for what mentality?
yeah.
You're just paying off interest.
I looked at the idea, right, when I'll travel a little bit down this route, but that happened to me. I thought I was doing the right thing.
Was this at 27 when you bought the house and the
No,
car?
no, no. Like because I was living here in this house, and then I had an investment property,
Yeah.
and it wasn't making any money, but I was like, but I'm doing the work now, Ryan. Like I'm working hard. I'm working 7 days, and I'm created a business, and I'm investing, and I'm like,
I'm buying future me time.
I
And
thought that I was going to make it, and so then my interest repayments went as a total, paying 2 home loans from $50,000 locked in
this was at
for
a
2 houses, but I was getting rent on one, so I was getting about 25 grand on one. So I was like, I'm okay.
yeah,
Went from 50 grand to 100 grand.
yeah,
That's $100,000 just to pay for the thing.
overnight, right?
Yeah. Well, I was lucky that I had locked in. I was like, these interest rates are too low. I locked one in for 2 years and one in for 3 years. So it bought me a little bit extra time.
Hmm.
But a lot of people were on variable. A lot of people got down to the 2.5%. And then when this it's forward looking, right? So the interest rates shot up before they could lock in anything good. They got really screwed. More people got screwed than what I did. I was lucky. Hindsight's 2020. I should have locked in my interest rate on a fixed rate at 2% for 4 years. As long as they'd give me, I should have taken it. I didn't.
Yeah,
Whatever. I looked at that mechanism and what happened, and I went, this is an absolute joke. Why do I have to sacrifice and work my ass off just to pay for the privilege for shelter, to live in a home, and then pay that off over 30 years? And then what? Then what do I get to do? Then I get to enjoy my life? What a joke.
Mm. That's sad to me, because I think the principle of that's really beautiful, right? So, you're putting your money into buying a home that someone else is going to rent. You're creating shelter for the community at that point, right? 'Cause someone might not be able to buy, but they're able to rent. I think not having people on the street is a good thing for the economy, right? And it's a good thing for people. So that, I think,
The investor is important. This is what people forget.
yeah, they're incredibly important, right? But then you're getting absolutely shafted by these repayments, just absolutely shooting up through the roof, and then it just creates so much uncertainty and so much fear surrounding property and money, and leads to people.
That affected me I was so mad and depressed, and it's like every day you're just like, working away to try to pay for the house
And you go,
repayments, and I sold the house. Like I sold the investment. I had to,
yeah.
and when I did it, oh my god, the weight lifted off my shoulders because that burden was gone,
Mm.
and I was like, wow, I'm a different person.
Yeah. Yeah, 100%. And I think so many people are, as the common saying goes, like drowning in debt, but they're drowning in uh, the volatility of a system that isn't actually supporting, from what I'm understanding, isn't actually supporting people.
Yeah,
Like
there's something wrong.
yeah, it doesn't seem like so that this is the question, right? Like what do people do then?
Yeah. So what you can do if you think the same as everyone else, and this is why I started on this track. I had friends who one of my first employers owns a lot of houses
Yeah.
because it was the timing. The timing was so important. So he's okay,
Mm.
right? He's sold off some of his houses. He's negative geared it. He's all right.
It's working for him.
It worked. It worked for him. He's a millionaire.
Yeah.
Right. If I'm trying to do the same thing in a completely different era and epoch of money and psychology and wages
Yeah.
and growth,
Different timing.
it's different timing. It doesn't work. So that didn't work.
This is where you need to be adaptable.
You have to. If you think that you're going to invest in property now as a young person, you're stuffed.
Yeah.
You'll never win. You have to think differently from the herd. That's being contrarian. Do the opposite of what people are doing. Float to where if everyone's going, you've seen that maybe that meme where it's two doors and one's got the huge line of like when a stock is rising, everyone wants to get on that stock, the momentum. But when a stock is falling, there's one person at that counter
goes, yeah, that
they
makes
all have
sense.
the stock. Think like that guy.
Mm-hmm.
All right. And that's the way I've thought. You have to think differently. There are opportunities out there for the coming of new financial system or alternative assets. And I'm not talking about fart coin.
No.
I'm not talking about fart coin.
But do we sneak crypto into here at this point?
No, we don't have to. We don't have to. I'm not talking about fart coin, but if you think differently in an asset that has utility, has value, whether it's stocks or whether it is a particular type of crypto, then you have an opportunity to recognize a trend that is being formed, right? The trend of the 2010 was Amazon, Google, Facebook.
The internet boom. Like that, everyone jumping on the internet, everyone going.
Yeah, but not only that, like their monopoly, the internet monopolies.
Yeah.
They've 10 bagged.
Yeah.
All those major companies are
Metas.
huge, absolutely huge. This book here, The Mobile Wave by Michael Saylor, he predicted the rise of Apple, and he goes through stories about how, kids and grandparents were using these iPads, and he was like, he just saw the trend and he put all his money into that trend. He was like, this is going to be huge because he's an engineer and an aerospace engineer, and he understands that physics matters and how that affects people, behavior matters. Put all his money into those ideas, 10 times his money, right? The people who bought houses 30 years ago, they 10 times their money. Was it luck? Was it skill? I think it was more luck than it was skill, but they still had to work hard, right? They had to sacrifice, make those mortgage repayments. I won't take that away from them. Never.
I'd say it's awareness, right? So like if you can see a trend coming.
I mean, for the people who bought 15 houses, yeah, that was awareness.
Yeah.
But they understood the money supply was growing and expanding. They understood store your money in hard assets. They understand that. That's the gold investor, right? I invest in gold because it's tangible, it's real, it's not going to inflate.
Yeah.
It does inflate. They mine 2% more of it every year. If they mine the gold from the asteroid, guess what?
What?
The gold supply just tripled. Your value just went by a third. But that could be farcical, could be real. I don't know.
Yeah, right. I think
there's risks to everything, right? Like that's a risk. People would say that there's no risk in investing in gold. That's a risk. And maybe it's a 0.01% risk. It's still a risk.
I would say then, because the question I asked was like, what does someone do in this situation? I think you have to educate yourself. I think that's actually a really important thing to do. Like,
it's a hard thing to do.
It's a hard thing to do, but like, because sometimes the education comes through making mistakes, i.e., me buying the car. that
The best investment you can make is to make mistakes.
100%. But then I think the other investment that you can make is educating yourself surrounding money, but then also giving yourself the freedom, if you would, or the opportunity by not being tied to something like a house to go, oh, Bitcoin looks like it's really going to make a move. Let's jump on that. Oh,
Go to the balls.
yeah, you gotta have the balls to
Conviction.
do it. You gotta have the conviction to do it, but that only comes from actually educating yourself and taking time to do it. And I guess not being in such a rush, because I think this is where a lot of like human flaw comes down to, not being in such a rush to get into the game, if you would. Because what's the game like? What's the life progression that we're all told is to, get the house, get the dog, get the
Get
wife, have the
married, have
children,
kids.
yeah, or not have kids, or travel around the world, or start the really big business and like just go gun ho into that. Like everyone's told these different narratives, right?
Mm.
Hold your horses a bit more.
Mm.
Take a bit more time.
Think about it, learning about it. Because I made the decisions and then I learnt about it. And that's normal. That's
Yeah.
natural because you don't care about a thing until you're invested in the thing.
Mm.
The houses did what? Hang on a minute. I'm going to go back to the library. I need to put some work in and try to figure out what just happened
Yeah.
because I don't know what happened.
But now you're sharing that with other people, right?
Yeah.
So that's the interesting like life progression where it's like, oh, here's
So listen to older people. Listen to people who have been like, it's one thing to learn from a mistake. You know what's better? You know what's better?
yeah, learn from others.
Learn from other people's mistakes.
Yeah, read some books.
Yeah.
Yeah, that's why I say I think the number one investment young people can make is into themselves and into experiences and talking to the people that came before you, but not being so married to their ideas. Because as you were saying before, you talk to a boomer, right? They might be really gun ho on property still. Step back and like, make the decision for yourself.
It's really hard to reinvent yourself
It is really hard to reinvent yourself.
because you're attacking your identity
Mm.
and your purpose and meaning.
100%.
Like people, this isn't a boomer slagging competition, but I tell you what, I'm infinitely frustrated with a lot of boomers' mentalities. Not everybody's, but a lot of them because
It's not for you. That
well,
mentality doesn't work for you.
yeah, it's their identity is attached to I worked hard, I got the multi-million-dollar property. That was me. I did that. And I'm like, you didn't do that. Yes, you worked hard. You didn't do that, bro. You were lucky and you got the right trend at the right time. That doesn't make you better than me. That doesn't mean that we need a recession because we're already in a recession. We are in a living in recession. Everything is going up in price. The shop fronts are empty. There's so many vacancies. NDIS businesses are shutting down. How on earth does an NDIS business shut down when it's expanding at 15% per year? What are you doing as an industry provider? If that's how you're running your business, you don't understand money, you don't understand how to invest, that you have shut down in one of the fastest growing industries.
Lack of education, lack of understanding,
arrogance, thinking that whatever's going on is going to continue to go on. We've had some growth here. We had 50% growth last year. Let's triple down on this idea. It's ballsy. If you get it wrong, you now lost all these people, all their work.
And that's a really hard lesson that you're going to have to learn.
And other people are going to have to learn on your behalf.
Yeah, 100%, which is, challenging to say the least. I think though, the boomers.
You defend the boomers?
I'm not defending the boomers.
No, you should, because I just ran through them.
Well, every single iteration of humans have opportunities in front of them, right? My generation, your generation, we had the opportunity to spend $10 on this thing called Bitcoin back in 2010 and be worth millions of dollars today for nothing, like for no effort whatsoever, And then you go, is it luck? Was it smart thinking? Who knows? It's just the opportunity you were presented.
Were you buying drugs on the internet and you just happened to have some leftover Bitcoin?
Were you on Silk Road and using it back then, and then all of a sudden you've got 10 Bitcoin left over today?
That wasn't me, by the way.
Yeah, no, not at all. Not at all.
No, I only understood Bitcoin 18 months ago.
I heard about Bitcoin back in 2015.
Yeah, I heard about it then too, 2017, and
yeah, I got told by a guy that I worked with in 2015. Look, we snuck crypto into that. We do every chat. I got told
you got 10 minutes left.
I got told in 2015 about Bitcoin, and I was suggested to me that I buy it. But being 15, I didn't have the maturity to understand like what this actually was, and nothing's certain until you look back at it in the past. It wasn't certain that Bitcoin was going to become like what it is now,
Hmm.
but it did. So I think every single generation has an opportunity to do something. I think right now we're in the opportunity of AI. And have you heard of like Web3, for example?
Yeah.
So like we're entering the digital space and the web space, and we're still very early on in it. Like there are millionaire kids who review toys online
Hmm.
who are three, who are just
Hmm.
like, oh, this toy is cool and this Nerf gun does this and blah blah blah. Millionaires. The boomers didn't have that opportunity.
Yeah.
Like that wasn't a thing. So every single generation does have an opportunity. I think it's just finding what works for you, and back to the whole.
It's not housing.
It's not housing right now, right? And that's clearly
It,
not.
it can't be. It won't be. It won't be housing. Housing's not going to make you rich.
Yeah,
And in the next 10 years, it's just not.
maybe in 30 years though, maybe my
Maybe
children,
after a collapse, if
maybe.
you buy them up, like what happened in Ireland, the housing market collapsed anytime around 2008. If the market collapsed, buy them up.
Yeah,
Well done.
exactly. Which is what happens a lot of time. So I think on that, again, going back to the question of like, what does someone do right now? I think it should take time. You take some time to figure out like, what do you actually want to do with your money? Do some education around like, what does inflation look like? What do interest rates going up actually look like before committing to these really big ideas? And if you have a gut pull, like you're saying this gentleman did towards, buying stock in Apple or buying in something that is potentially going to go up, maybe lean towards that, which kind of goes into the investing side of things, right? Investing your time, money, and energy towards something that isn't necessarily physical, like a house.
Yeah. It doesn't matter. Whatever you do with your money, it is an investment. Like, don't lie to yourself. Don't trick yourself and go, I'm going to put my money into my courses or
Yeah,
my health or my
it's an
or a
investment.
stock market. It Whatever you do with it, it's opportunity cost. It is investing your money. It just sounds like it's a different way. You hear the word investing, you think, oh, you just want number go up. You just want to earn more money. Damn right I do,
Yeah.
because then I don't have to work as hard in the future. I can buy back my own time
Mm-hmm.
because I'm making my money grow. It's a gratification delay that will reward me if I'm right in the future. That
Mm,
it doesn't matter if you're looking at houses, Bitcoin,
whatever it is.
stocks,
Yeah.
and businesses.
Mm. Gold on an asteroid.
Yeah,
Just don't buy any gold until the asteroid
yeah,
comes,
or,
and
or
buy all of
education and
it.
going to uni and wanting to create a career where, yeah, I went and did 8 years of my doctorate. Now I'm making $200,000 a few years into my career. Like, if that's what you're doing, that's an investment of your time and money and future self. Like, it's all an investment. View everything as an investment. If you're just pissing your money away at the pub or on sports bet every week,
Mm.
then like you're investing in the moment and trying to have a fun time in the moment.
Instantaneous
There's
pleasure.
nothing wrong with that, but recognize what you're doing and don't say, no, I don't invest. That's stupid. And then go and do that. Like, you're a liar. You're
This
lying to yourself.
this is where I like the view of money being energy, right? So as far as not only from like the spiritual sense, but also like I'm physically putting energy into this thing, right?
Mm,
If I'm putting money towards my health and a coach and supplements and stuff like that, I'm putting energy into my health. If I'm putting energy, as you were describing, into an investment property, that's where my energy is going. And then what did you say when you sold it? Huge relief
mm.
off your shoulder, huge energetic, like just dump. And now your energy gets to go into things like making a course or more into the human currency or more into skilled care or whatever it may be. It
Mm.
frees up your energy for something
Yeah,
else.
exactly. Because I'm not pressured to have to work harder, work more.
Yeah. So if someone's like listening to this and they're going like, what do I do? There's actually nothing you have to do, eh? It's just what do you want your energy to go into?
The
What do
answer
you
is
want to
this.
invest in?
The answer in terms of monetary, what do you do? All the things you've said about investing your time to learn about the thing, because you have to have the conviction. You can borrow an idea, but you can't borrow the conviction.
Yeah.
So, old mate's got a brilliant idea. Oh, Ryan said buy Bitcoin. Yeah, cool. All right. Bitcoin just went down from 123,000 US to 113,000 US over the weekend.
I'm sorry.
Ryan's an idiot, man. I'm selling this thing.
Goes
Because
to
you had no conviction. You borrowed my idea. You didn't learn about the idea and feel the idea and then do the idea. And I've been through those dips. Went up to 100 US, then down to 75 US.
Yeah.
Right? When I had, majority of my wealth in it. You don't think that hurts? I know people who have had, $1 million worth of Bitcoin, and then it dropped from 70,000 US to 20,000 US.
This was
Could
back
you
in
imagine that
COVID,
roller
yeah.
coaster?
Oh, nuts.
That was the Sam Bankman-Fried collapse. The answer is you put your money into an idea that is going to grow. If that's a stock, if that's
Yourself?
no, not yourself, because like we've done the yourself part. I'm saying the answer is the tangible bit.
Okay.
Right?
Okay.
What do you do with your actual money?
Yeah.
You've invested in your courses, you've done all that stuff, and now you're going to put the money because you want to grow it. You want to grow the actual money. Ryan says it's not houses. Well, go ahead, read the books, watch the podcast, learn about houses, see the ads pop up and say, if you're making 50,000 per year and then you
They're
put
exhausting.
$50,000 into a house
Yeah.
and then you've got equity leverage and it's like it's nonsense. It's
This
nonsense.
is the final housing boom that's going to happen.
Yeah, right. You're going to miss it. It's nonsense.
What do you do with your money?
You put it into, you learn about a company, you learn about a stock, you learn about an idea.
Yeah.
And then you put your money in the idea, because when skilled carer earns money, right, I can choose to reinvest that money back into skilled carer to grow it.
Yeah.
I could pay for marketing. I could pay for sales staff. I could pay for admin staff. If I think it's going to grow better than another idea. But if I go, yeah, cool, that might make skilled carer grow 20%. If I've got another idea that I think is going to grow 50%, why would I put my money into that idea? I put it into this idea. I put all my money from skilled carer into this idea, because that's getting a better return, compound annual growth rate than this idea. 50% compound growth calculator, put 50%, which is Bitcoin's returns, put that into a compound annual growth rate, even if it's declining over 10 years, see what pops out, whatever number you stick in there. It will blow your brains out. Where this particular idea can go, if you believe in that idea. If you don't, you could buy the next Apple, the next Amazon. Those ideas do the same thing, compound away at 50% per year. Monster Energy drinks. Who would have thought that company would be the biggest growth company in history before NVIDIA? Right. So when AI, where's the next boom? Well, the problem with understanding investing is that some of this stuff's already pricing in future growth. Because markets are forward looking. They're pricing in what's to come, not exactly how we are. So you have to put the time into understanding investing, or you will lose your shirt. But there's plenty of resources out there to do that. And what the course that I'm creating, I'm not trying to make the sales pitch. You told me I'm not a salesman.
No.
But this is
talk to me about it. I like this.
The idea is learn about money, learn about economic systems, learn about inflation, realize there's a problem. Solve the problem. Are you going to invest in bonds? Are you going to invest in gold? Are you going to invest in Bitcoin? Are you going to invest in stocks? Are you going to invest in property? Then make the choice. Learn about it, have conviction behind the choice. If you're the builder, what I'm saying might be largely irrelevant in terms of the dissing on housing, because you can still make money from housing if you're smart. And if you have an advantage that I don't have. You've seen my wall out there. I'm trying to remove the render from it. I don't know what I'm doing. I probably caused damage to the property trying to add value. Right? I'm not the builder. I'm not the guy to listen to on housing investment. But if you're the builder, then play to your advantages. Buy the rundown thing in the nice suburb, the worst house on the best street, and then put your time and energy into renovating it. And you probably will, that will rocket you ahead of someone who is the accountant, and they can't do that.
Use what's available.
Because you're sacrificing your time and energy to do that. That thing that you have a skill in. So that's me coming full circle on slandering property and then giving an attaboy.
Don't forget the boomers. Shout out to the boomers.